Welcome back to my weekly trade videos on Invesco QQQ, where I trade options to generate income. You may recall that last week on Friday, August 2nd, I was assigned to buy 100 shares of Invesco QQQ at the expiration of a cash secured put. I paid $490 a share for 100 shares that were only worth $450. I've let those shares sit in my account all week, and today let's figure out what we're going to do to improve this position. Right now, Invesco QQQ is trading at $446.88, and I was assigned to buy the shares at $490. So ideally, I would sell them. I would sell a covered call with a strike price of $490, so I wouldn't take a loss on those shares. But there is nothing available at that strike price that makes it worth selling the contract. Even if I look all the way out to, let's see, this is August 23rd, 2 weeks from now, I could sell a covered call with a $490 strike price, but it would only bring me $21. So this is where my ongoing trade and keeping my records lets me see a better way to manage this trade. So here I was assigned at $490 a share, but because I've been trading this since May 16th, and I've already brought in a lot of income, and I've bought additional shares. I own 115 shares. I have an out-of-pocket cost of $54,035, and my average investment per share is $469.87. So rather than set a strike price for $490, I'm going to go ahead and buy 3 more shares while the price is low, and set my covered call strike price at $475. And then while I'm at it, I'm going to go ahead and sell another cash secured put with a strike price of $410. So let's get going. Like and subscribe to make sure you don't miss any updates. I'm going to buy 3 shares. And that filled at $447.25. I'll use the spreadsheet to do my multiplication. So I just spent $1,341.75 for the shares. Now I'm going to sell a covered call with a strike price of $475. And I have 2 expiration dates I'm going to look at. The first is August 16th, 7 days from now. I can sell this covered call and receive $33 in income, but let's see what happens if I go out 1 more week, 14 days from now. If I go out 14 days, excuse me, I can receive $105 in income, and according to the Thinkorswim website, this trading platform tells me there's about a 10% chance I'll be assigned. So I'm going to go ahead and select this option. Sell 1 call with a strike price of $475 that expires in 14 days. And it just filled, and I received $102.34 for it. So let me put those numbers on the spreadsheet. And then the last move I'm going to make here, since the price is somewhat depressed and I'm trying to make a little more income, I would not object to being assigned to these 100 more shares at $410 a share. I think that would be a great price to buy this ETF. So I'm going to go ahead and sell a cash secured put with a very far out of the money strike price at which I would be happy to be assigned. So a $410 strike will bring in about $166. According to Thinkorswim, there's maybe an 11% chance that I'll be assigned, so I can manage it if I need to. And there I was filled at 165, so 164.34 just came into my account. Which is a 10.45% return. Not a great return, but not so bad to just keep chipping away at the current unrealized loss that I have. All right, let's add up the numbers. And then the last thing I'm going to do is I'm going to put in a limit order good till canceled to manage this covered call just in case the share price rises. But first, let's do the numbers to see where we are right now. So I bought 3 shares for negative $13.4175. And I'm going to go all the way back to my original starting place from May 16th. Everything that I have spent or brought into the account. And now instead of 115 shares, I have 118 shares. So my average investment per share has been brought down a little bit by the purchase of these 3 shares. And now the covered call. And I'm going to go back and add all this up again. I'm going to add in the income from the cash secured put that I just sold as well. So now my total expense on this position is $55,110.89. And I own 118 shares for a total investment per share of $467.04. Now let's take just a moment and think about what could potentially happen on Friday, August 23rd. I always color my hypotheticals in very bright yellow, so I remember they're not part of the calculations for the overall position. But if the share price drops to 410 or below, I'll be assigned to buy another 100 shares. So if the share price is, let's say, 405, then I would be assigned to buy 100 shares and I would pay 410 a share for them. I don't think this is going to happen, but if it did, instead of owning 118 shares, I would own 218 shares, and I would be in for over $96,000. So this would be a huge portion of my retirement portfolio. With an average investment of $440 a share. So that is one possible outcome. If the share price goes up to, for example, 480, then I would be assigned to sell 100 shares, receiving $475 a share for 100 shares. If that happens, then I think that calculation was already done for me, but I'll go ahead and sum it again. Expense, new income, and I would be down to 18 shares with an average investment per share of $422. What I think is likely to happen is that the share price will be somewhere between 410 and 475, and both my put and my call will expire worthless, and I will be exactly where I am today. But I hope the share price will be in a place that allows me to sell a cash secured put with a higher strike price. So I'm going to keep chipping away at this, and we'll check in next Friday, but the position doesn't expire until August 23rd. Oh, and the last thing I'm going to do is place an order just to make it easier for myself so I don't have to monitor this position so carefully. If the share price begins to rise, it may be possible for me to increase the strike price of this covered call by rolling it out. So I'm going to place what I call an aspirational order. I would be very happy to roll this out and raise the strike price to 490. Even if I had to go out as far as September 20th. Right now, I could roll it out to September 20th and receive about 80, is that right? $80. Let me review that. Yeah, that would be a credit. But I'm going to give myself just the possibility. I'm going to choose a somewhat random but not unreasonable number. I'd be willing to roll this out a month for $310 if I could raise the strike price to above the price at which I was just assigned those shares. So I'm placing this order as a limit order, and I'm going to call it good till canceled. And I'm just going to leave it there in my account on the chance that as the share price rises, I can get filled for an extra $310 and bring this strike price back up to where I want it to be. And we'll check in next Friday and see where things change. Or where things stand. I may change this limit order a little bit, but for now I'm going to leave it there in my account so I don't have to monitor so closely what's going on. All right, that was lots of steps for today, and I'll see you next week, and we'll reevaluate where everything stands with QQQ.